please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Straight to our top focus this evening. Now, the Reserve Bank of India has raised a red flag on state finances. In its annual report analyzing state budgets, the RBI has said that for the last 3 financial years, state governments had budgeted for a gross fiscal deficit to GDP ratio of 2.7% in FY18, but the revised estimates place it at above 3% in all 3 years. Essentially, this means that states have borrowed and spent more than they expected, while revenues have come in much below the expected levels. But in the same breath, the RBI report has also said that states can take several steps to set the situation right. CNBC TV 18's Ritu Singh has more details. Ritu, what are the key risks to state finances as highlighted by the report, and what can the states do to set the imbalance right?
You know, the sum and substance of this RBI report is this, that for the last 3 years, starting FY16, the state's fiscal position has only worsened. You know, it has consistently stayed above that 3% target, under the FRBM, which the states have consecutively breached for the last 3 years. And this is data combining all the 25 states that RBI publishes in its annual report each year. This year's theme also centers around, these revised estimates that we're seeing of the state's fiscal position measured by the gross fiscal deficit ratio to the gross development product. This is the GDP ratio of the state's gross domestic product, that is. What the report says is that for FY18, the revised estimate of the state's fiscal position is about 3.1%, and for FY19, it is estimated at 2.6%. So there is expected to be an improvement in FY19, but that is also mired with several risks that come along with this fiscal deficit target that has been given by states this year. It says, there is visible pressure on the fiscal deficit emerging from various factors, the key of which is, it is an election year. Various states are going into elections. There are higher expenditures that are, going to happen. But key, the most important of those are those emanating from farm loan waivers, the announcements and the rollouts of farm loan waivers, as also the 7th Pay Commission recommendations, which are now being implemented, especially that provision, that part of which is not provided in the budgeted expenditure of the states, which will emerge as a key risk when it comes to the fiscal position of these states, which will continue to worsen this year as well. But going forward, as you said, the Reserve Bank of India has said there are ways to tackle this. It says the GST, while initially it has been disruptive, in the long term will aid to revenue expansion for the states with a wider tax base. That is something that the RBI points out as a positive. But overall, this deteriorating health of the states is a matter of concerns, because it also will result in higher borrowing costs for the states as their position worsens, which could spiral into a debt trap where, because of higher costs for borrowing, debt will continue to increase. So this is the sum and substance. Not very good news per se, but yes, there are measures outlined as to how states could curtail the dipping revenues and help increase that to some extent. But to take this forward, we are also joined by Rupa Rege, who is the chief economist at L&T Financial Services, and Mr. D.K. Joshi, who is the chief economist at CRISIL. Both of you, thank you very much for joining in. Rupa, first to you, last 3 years, we've consistently been above that 3% mark. When you look at the combined state fiscal, deficit to GDP ratio, your take, firstly, you think some of these risks that have been highlighted may emanate sooner than later?
Oh, absolutely, because even the reported numbers, cannot be taken at face value, because we know that many states who announced farm debt waivers had not, explicitly accounted for them in their budgets. So there was a lot of uncertainty as to how those debt waivers will get financed. And eventually, if it comes to, if the burden falls on the budget, then deficit figures are going to worsen. So I think this is a kind of lower estimate of the whole problem. The actual risk is much higher than what is revealed by the numbers.
Okay, Mr. Joshi, do you think so as well? I mean, is the risk actually higher than what the Reserve Bank of India perceives in this report?
Well, I think they have given the numbers that have come out of the states. And one problem that clearly emerges is that, or which RBI has also highlighted, is that the state's own tax effort has been weak. I mean, so the major reason behind slippage is that the tax collections of the state governments have not been up to the mark. Well, and then there were expenditure pressures from pay commission and loan waiver, etc.
Yeah.
But having said that, I think I just want to point out that when you contrast the state revenue deficit numbers, I think the state position looks quite good. I mean, the revenue deficit of the states is still quite low, and I think about 0.4% of GDP, which means that overall spending of the states is in the right direction. I mean, despite, I think, these some pay commission and loan waivers. Otherwise, I think the revenue deficit would have bloated very significantly, and they're budgeting a revenue surplus in 2018-19. Then I think the saving grace possibly for 2018-19 could be the GST. Because the states have a guaranteed, I mean, even if GST is below the collections are below the mark, states still get compensated. So I think states are in a way cushioned from there, and if with the moving up of the economy they are able to raise their tax efforts, then I think the targets could be met. But I mean, looking beyond this, I think it's obviously a pre-election year, so if states turn more go towards revenue spending, I think then the chances of slippage again are there. So it's a mixed bag.
Okay, Rupa, Mr. Joshi seems to differ. He's saying that GST could perhaps be, the surprise element that could save the states from, the sort of gloom and doom that has been predicted in this RBI report. Do you think the collections in the recent months, which have shown an improvement, are sufficient?
You see, for them to make a material or meaningful difference, one has to wait because, you see, there's too much volatility in industrial production growth numbers also. Yeah. And you see, if you look at various leading indicators of for industrial sector as well as services sector, they are not, giving you a clear-cut picture of any uptrend. So I think it will take some time for GST also system to stabilize and, give good revenue support to state governments on a sustainable basis. Okay. So I think the FY19 is going to be marked by a lot of uncertainties.
Okay, but what do you think, what do you make of the borrowing costs? I mean, if you look at the GSEC yields, they're already at 7.87% as of now. For states also, the borrowing costs are rising. Do you think that will have a spiraling impact on their debt positions as well?
Oh, I'm worried more for, the overall corporate sector and other financial entities who actually will, will be driving growth because it's not the GSEC yields, but, the yields on the state development loans. Yeah. They have increased or widened the spreads even on corporate bonds, and the cost of borrowing, which earlier had a handle of 8.2%, already has crossed 9%. For non-PSU corporate entities, which is quite on the higher side. So I think besides state governments themselves getting into a debt trap, I think the overall, the bond market scenario will have a very negative impact.
Okay, Mr. Joshi, as Rupa was highlighting, the bond market, with the yields rising, is not really sort of good news for the states. Do you think this debt spiral that we're talking about, that could be a major cause of concern in the coming year?
Well, I think it depends if these trends sustain then, because debt is a stock. I mean, stock moves, it takes time for the stock to move. So I think right now we are seeing pressure from the flow side, which is the yearly deficit. And if this trend continues, obviously, I think the pressure will be visible on the stock of debt as well. But I think just to highlight, I think it's not that all states are under fiscal pressure. I think
11 out of 25, according to the report, have the risk of breaching that 3% mark.
True. But I think there are some which are doing well also. So I think one must look at them also.
So you think some of the better performing states will be able to balance out the overall average saving grace there?
Well, yeah, but I think states don't get, benefit in terms of the borrowing cost so much. I mean, it's not contingent on the fiscal situation. I mean, so there is hardly any difference between the yields. But no, I don't think that the other states can balance out. The pressure will remain this year, but I think the only point I was trying to highlight is that the states are not running a revenue deficit, which is in itself a good thing. I mean, so they're running a very small revenue deficit. which essentially means that most of the borrowings that they make are going for capital expenditure.
Yeah.
Unlike the central government.
Okay.
And I think what we have seen in the past that the spending pattern of the states had actually improved. I mean, only recently with the pay commission and farm loan waiver, I think it's getting a little skewed.
But you don't think there is a risk of private investment getting crowded out?
Well, I think private investment also. I think there is there's also a counter factor that is working. Government itself is investing. I think the investment pickup that we see
much of the growth. Yes. Yeah.
So that itself that also helps crowd in private investment. So I think it's from right now private investment is on a slow burner because of other reasons. I mean, it's because they're still under capacity overhang. I mean, they're trying to improve their capital structure, so they are more focused on improving the debt equity ratio, for instance. And then there is political uncertainty also in a pre-election year, so that also postpones investment decisions. So I think private investment is on a weak burner because of a different set of reasons right now.
Okay, Rupa Rege and Mr. E.K. Joshi, both of you, thank you very much for giving us your time. And with that, Arundhati, back to you. It's not very good news as far as the state finances is concerned, but the hope is, in time when GST stabilizes, there'll be more revenue mobilization, thereby saving the state's financial positions.
Absolutely, Ritu. So for now, not a very good picture. Thank you so much for taking us through those details, Ritu.